Hi traders, welcome back to the Forex Geek channel. Now, if you are still trading based on just one chart time frame, you are missing the bigger picture. So let us dive into multi-time frame indicators, the tools that help you align with the market on every level. Why do multi-time frame matter? You might be asking that question. Now, you need to understand that markets move in waves, right? Obviously, as you can see, price does not move in a straight line. Market actually moves in waves. And each time frame tells a different part of the story. The exact pattern of waves you see on the daily time frame, obviously, if you go to the 4-hour time frame, it's not that same exact pattern. You might see more highs and more lows as you go down into lower time frames. You might begin to see more highs and lows, right? A signal on the 5-minute chart might look perfect until you realize that it's going straight into resistance on the 4-hour chart. So multi-time frame indicators give you the ability to see that resistance before you enter, saving you from a bad setup. Now, it's not just about zooming out, it's about integrating different perspectives into a single view. All right? When your short-term setup aligns with a higher time frame trend, your trade has way more conviction. Now, how do the multi-time frame indicators work? How do these indicators actually work? They pull data from higher time frames like the 1 hour or the daily time frame and then overlay that information on your current chart, whatever time frame that you are on. For example, if you are using a multi-time frame, let's say you are using an MTF moving average, for example. Let's say you are using an actual multi-time frame moving average. It might show you where the higher time frame moving average is sitting, even while you are looking at a lower time frame. All right? And then an MTF RSI might show you that the higher time frame moving average, the higher time frame, I was just talking about moving average just now, okay? So while the let's just add another MTF RSI, okay? I just want to explain it using an actual indicator. That is why. Right, that's why I want to add something to the chart that is reflecting what I'm talking about. Okay. Okay. So, different indicators have their different methods of giving signals and giving information, basically. All right. So, an MTF RSI might actually show you that the higher time frame is already overbought. For example, you can see that the indicator could have maybe a dashboard or something, and it's going to be telling you information about a particular time frame. For example, telling you this one now is showing the RSI points for different RSI lengths. Okay, so this is not exactly what I was trying to get. Okay, let me just see if I can get an exact one. This one is if you want to know the different RSI levels for 14 RSI, 28 RSI, 42 RSI, and so on and so forth. Okay, so in like manner, an MTF RSI should be giving you information, across different time frames. Like I said, different indicators have different methods for giving information. So basically, in this video, we just want to understand how multi-time frame indicators function, because there are different multi-time frame indicators out there. right? There are several of them, right? So you just need to understand how they work so that when you are using a multi-time frame indicator, you will know how to use it effectively. You will know that these indicators try to give you information about another time frame, even when you are not currently on that time frame. Okay, so they try to, make your top-down analysis even easier. All right, remember that top-down analysis is an approach that involves doing analysis across different time frames, usually starting from the higher time frame and coming down. All right, so multi-time frame indicators try to enhance multi-time frame analysis, tries to make it easier. Okay, so it gives you an instant roadmap without switching between tabs or time frames constantly. Now let's talk tools. Okay, we have already started talking about tools, but just for further emphasis and understanding, better understanding, MTF moving averages, that is multi-time frame moving averages, they identify long-term trend direction while trading short-term moves. Okay, so just like I already said, if you are using an MTF moving average, you can be able to get information about long-term moves even while you are trading short-term. And then an MTF MACD, for example, an MTF MACD can give you information about exhaustion or reversal points across different time frames. Basically, you can see where momentum is building across different time frames, right? While an MTF RSI can show you potential reversal points even from a higher view. Now, MTF support and resistance zones, these are just a few examples. MTF support and resistance zones can help you to know where the market is likely to react. So these aren't gimmicks. They are designed to keep you in tune with the broader flow while staying precise on your entries. Now, do not use multi-time frame indicators as a green light for every trade. Okay? Use them as a filter, a way to validate what you are seeing on your main chart. Okay? Ask yourself, is the higher time frame trend bullish or bearish? Is this signal against or with that trend? Is the market overextended on a bigger scale? So you should actually ask yourself these questions. Okay? The goal is confluence. You're looking for confluence. And it is very important that you get your confluence before proceeding to take that trade. For example, you get a signal to sell and you identify on the higher time frame that you are in a buy trend. In that case, if you are not a scalper, I will recommend that you don't take that sell trade. In fact, even if you are a scalper, you should approach it with caution. Okay? You are looking for confluence, you are looking for multiple signals telling you to do the same thing. But when you begin to get the buy signal and the higher time frame trend is bullish, then you can look for more confirmations to support that bullish trade. You can watch out for trend lines, on the particular time frame that you want to execute your trade on. Watch out for trend lines, watch out for rejections around support and resistance zones, watch out for candlestick patterns, and all of that. You want your setup to align across time frames and across, several indications both price action or other technical indicators for maximum conviction. So now multi-time frame indicators give you vision. They help you avoid bad trades, confirm strong ones, and understand the full story of market movement. So it is not just smart, it is strategic. All right? If you found value in this video, hit that like button, subscribe to the channel, and click the notification bell so that you do not miss out on more tactical Forex content. Okay? Drop a comment if you are already using multi-time frame analysis in your trading. In the meantime, thank you for watching, and I look forward to seeing you in the next video. Stay sharp and catch you in the next one.